if you're coming in and buying at 180 or 200 or 250 or whatever the number is going to be, it's just natural for markets to undergo cycles. Maybe Bitcoin and ETH went down 90% in 2018. Okay, so I'm not saying we're going to go down 90%. I'm saying we can go down 70%. The reality is the dollar went down a lot against gold.
That was sort of the debasement trade, right? The trade that a lot of Bitcoiners are betting on. So I was surprised that you were betting on the US dollar.
Yeah, I had this view, if I think back to it, that the U.S. administration was going to really tighten fiscally, with Doge, which sort of went away.
Bitcoin is stuck. For the past 6 months, while the stock market and gold have been surging to new highs, Bitcoin has barely moved. It's been flat, grinding around $100,000, refusing to break higher despite every bullish catalyst imaginable. The frustration is real. Traders are being wiped out due to excessive leverage. Long-term holders are starting to question if the rally is done, and critics, like Peter Schiff, are calling it a bubble propped up only by political favoritism. The confusion is understandable. Bitcoin now has clear regulatory support, spot ETFs are approved, institutional adoption is growing, yet the price refuses to cooperate. Meanwhile, gold continues to climb, and traditional markets continue to set records. So what exactly is wrong with Bitcoin? For many, this feels like the top. The momentum has stalled, the hype has cooled, and doubt is creeping in. Some are wondering if Bitcoin's best days are already behind it, if $100,000 was the peak, and everything from here is downhill. The fear is spreading, and the market's silence isn't helping. But macro investor Dan Tapiero sees something completely different. He's not worried at all. In fact, he believes this is exactly what should be happening. According to Tapiero, Bitcoin hitting $100,000 and then pausing isn't a failure. It's natural, it's healthy, and more importantly, it's temporary. He still expects Bitcoin to reach $180,000 in this cycle, and he's not backing down from that call. Tapiero argues that the fundamentals driving Bitcoin and the entire crypto space are stronger than they've ever been, and that a simple doubling in price from $60,000 to $120,000 doesn't even come close to reflecting how much the market has actually improved. While everyone panics about the short-term price action, Tapiero is focused on the long game, and he's convinced that this bull market is far from over. Let's take you back to Dan Tapiero's interview, where he views $100,000 as the market's psychological load zone, fueling a healthy consolidation ahead of the aggressive surge to $180,000.
Markets over the short term never exactly correlate. And I know gold has been strong, as you mentioned, and traditionally that's meant that Bitcoin would also be strong. The liquidity that's hit NASDAQ and gold traditionally hit, in a positive way, Bitcoin, ETH, and the space in general. I think this bull phase, we still are going to 180,000. That was my target from the bottom, at the bottom of 22 and early 23. But I said very clearly, and I've thought this, that we were going to get to 100,000 and then we were going to stop for a while. Okay. I don't know if it was going to be weeks or months. I don't know how long. In markets, there's a very sort of, in a way, silly theory called the big round number theory. And markets tend to stop at big round numbers. Dow at 10,000, NASDAQ 5,000, or whatever 4,000, whatever, the round number is. And I think that what's happened is you have a lot of distribution. So people who have been long Bitcoin, call it from 21 before, people who bought Bitcoin at 5,000, 10,000, people who bought Bitcoin at 100, 200, 300 from years ago. I think their essential target has always been 100,000. Always. Okay. If you bought Bitcoin at $500 and you're at 100,000 now, it is very difficult to think, let's say that's over a 7-8 year period, very difficult to think that you're going to make the same type of percentage return over the coming 5 to 7 years. It's hard to make a bet that it's going to 2 million. I think, which would be a 20x. I think Bitcoin is going I think Bitcoin minimum, should do $1 million over the next 10 years. Okay, but that's a 10x return. That's not what you've made in the past 5 years. I think that, we have a natural stopping point here at 100,000, and you're seeing major, very large liquidations. OG whales selling at, $1 billion of Bitcoin. The other day, Galaxy announced they sold $9 billion for one person. And that one person was probably in it, 10, 12 years, who knows? So, gold, as an example, in the last 5 years, is not up 20 times, right? Even if I think about the bottom in early 23, when Bitcoin was 20,000, Bitcoin is up 5 times. Gold is not up 5 times in the last 5 years. So when you say Bitcoin's underperformed gold in the last 6 months or the last year, it's just because you're using a starting point that isn't really valid. And so I think Bitcoin is doing absolutely what it should be doing. Now, you go on X or Twitter, right? And every single little trader guy is complaining because, they want it to go higher. And every time it goes up to 120,000, they start buying, and they buy on leverage. And then a big seller comes in and wipes them all out down to 100,000. We've seen that multiple times. I always say that this is the easiest market to make money in. It is nearly impossible to hold on to it. And that's largely because many of the players also have more of a short-term mentality. The only way to build wealth in this space, in my opinion, is to have a 10-year view. In the digital asset, crypto, Web3, Bitcoin space, however you want to call it, there are a lot of people who don't have experience managing a portfolio. They've never traded bonds and currencies and stocks and commodities in the old market. This is a market just like any other market. And we've seen this many, many times. So this is definitely still, to me, in the bull phase, and it's a consolidative period. I'll tell you why. If I step back and I look at the fundamentals driving the entire space, they are so much better than 5 years ago, than 10 years ago. It's incredible. 10 years ago, people were being put in jail, right, for transacting in certain cryptocurrencies. Even 2 years ago, I had companies in my 50T portfolio that were being sued by the SEC. Okay, 2 years ago. Those companies, some of them are now public. They're public companies. I think the macro backdrop is still positive, so I don't see a bear phase emanating from that. A big part of the Bitcoin drop in 21, 22 was not just FTX blowing up and 3AC. It was also the Fed took interest rates from 0 to 5. We don't have that backdrop, and I think it's actually the opposite now that rates will still be coming down. And I suspect liquidity will still be quite plentiful when this government shutdown business stops. And the government can actually get back to making decisions. I think that might be hurting the market short term as well. Yeah, I don't think the bull and bear phases are repealed. And I think after this bull phase is finished, I will tell you this, I still think, like, if we can get up to 180, 200,000, which I think is reasonable, I think we'll have another bear phase again and go back down to, 50, 60,000. And then it'll go from 50, 60,000 up to 600,000, 700,000. But that's, a 5-year type of roadmap, right? And so, I'm not guaranteeing that. It's just, that's my framework. And my framework hasn't changed at all.
Tapiero explains that Bitcoin's stall at $100,000 isn't unusual at all. It's actually predictable. Markets tend to stop at big round numbers, and $100,000 is the biggest psychological level Bitcoin has ever faced. For years, early investors who bought Bitcoin at $500, $5,000, or even $10,000 have had one target in mind: 6 figures. Now that it's here, they're selling massive amounts of Bitcoin are being distributed. Recently, Galaxy Digital announced a $9 billion sale of Bitcoin to a single client who had likely been holding the asset for over a decade. Billionaire whales are cashing out, and it's creating natural resistance. But Tapiero doesn't see this as bearish. He sees it as a natural rotation. The OGs are taking profits, and institutions are absorbing the supply. This is how markets mature. The fact that Bitcoin is holding strong despite billions of dollars in selling pressure proves that demand is real and durable. It's not collapsing under the weight of distribution, it's consolidating. And consolidation, Tapiero insists, is just a pause before the next leg up. He also reminds us that Bitcoin is still up 5 times from its early 2023 lows. Gold hasn't done that. The stock market hasn't done that. When people complain that Bitcoin has underperformed over the last 6 months, they're cherry-picking a time frame that doesn't reflect the broader picture.
First of all, I'm very positive on gold. It's had a phenomenal run. I think you can be positive on gold and Bitcoin, and I think they have different fundamentals that support them. In terms of the sort of the micro view about the only thing supporting Bitcoin is this administration, I think that's, I don't want to say microscopic, but I think that's only one very small aspect as to what's been going on. I just mentioned briefly, 5 years ago, there was no such thing as stable coins. They didn't exist. And with or without U.S. Clarity, last year we had $15 trillion of stable coins trade. So you had a market there that went from 0 to 15 trillion during a period where there was no support. You had the growth you have the growth now in prediction markets, RWAs. I think you're going to have in the future. So you could argue, if you were going to say that now is the top, that 120 was the top of the market, you would say, hey, we've had all these positive fundamentals and the market has failed to go up higher. But if I look back at the previous peak in 21, we hit 60,000, right? And I look at all of the positive fundamental developments from the peak in 21 till today in 25. And to me, they're not priced in. A doubling of the price of Bitcoin from 60 to 120 does not properly discount the fundamental improvement in the backdrop in our space. If you're coming in and buying at 180 or 200 or 250 or whatever the number is going to be, it's just natural for markets to undergo cycles. And, maybe Bitcoin and ETH went down 90% in 2018. Okay, so I'm not saying we're going to go down 90%. I'm saying we can go down 70%. I mean, look at tech stocks, look at biotech stocks. They've had booms and busts. These AI stocks, at some point, they'll stop going up, and then they'll have a bear phase, and then they'll go down 70%. This is normal for markets, okay? It's just, that's the markets are a reflection of, the human condition, and the human condition is, very often driven by greed and fear. And we're not at, maximum greed, and we're not at maximum fear, I don't think. And there'll come a time, where the price will be much higher in Bitcoin. People will feel complacent, and then there will be a very negative catalyst. Or the market will completely stop going on phenomenally new information, and that would be called a bearish divergence.
Tapiero's conviction comes from something deeper than short-term price movements. He's examining the fundamental transformation of the entire cryptocurrency industry, and he believes it's not even close to being reflected in the current price. 10 years ago, people were going to jail for transacting in crypto. 2 years ago, some companies were being sued by the SEC. And today, some of those same companies are publicly traded. The regulatory environment has flipped completely. Stablecoins didn't exist 5 years ago. Last year, they facilitated $15 trillion in transactions. Prediction markets are growing. Real-world assets are being tokenized. AI agents will soon use blockchains to transfer value. None of this existed before, and none of it is going away. Tapiero also pushes back hard against the idea that Bitcoin is only holding up because of Trump's support. He calls that view microscopic. Yes, regulatory clarity helps, but the real story is much bigger. This isn't about politics. Blockchain is the digitization of value and money, much like the internet was the digitization of information. It's not a Republican or Democrat thing. It's technology, and it's inevitable. Democrats are already realizing they made a mistake alienating the crypto community, and Tapiero expects both sides to compete for this voter base in the next election. As for recognizing when the bear market actually arrives, Tapiero is clear. It won't come quietly. Bear markets are triggered by major negative catalysts, and the market's failure to rise in response to positive news. Right now, he sees neither. The fundamentals are improving rapidly, and the price is simply digesting gains. He expects Bitcoin to eventually reach $180,000 to $200,000 during this cycle before entering another bear phase, which could take it back down to $50,000 or $60,000. But even that wouldn't be unusual. Markets driven by human emotion tend to cycle between greed and fear, and cryptocurrency is no exception. Bitcoin and Ethereum dropped 90% in 2018. A 70% drop in the future wouldn't be shocking. It would be normal. Tapiero also emphasizes that the only way to build real wealth in this space is to think long-term. A 10-year view is essential. Short-term traders get shaken out during consolidation periods like this one. However, those who hold through the cycles are the ones who actually accumulate life-changing wealth. The volatility isn't going away. New participants will always enter at the top and feel pain during the corrections. That's how markets teach lessons. But the big picture remains unchanged. Bitcoin is maturing, its infrastructure is being built, and the macro environment still favors digital assets in the long run. Now, do you think of Bitcoin's pause at $100,000 as a warning sign that the bull market is over, or just a temporary stop before it finally takes off toward $180,000 and beyond? Please leave your thoughts in the comments below. Thank you for watching. Don't forget to like and subscribe.